afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 25th of July and we have our regular Tuesday guest, Charu Chanana, market strategist from Saxo Markets, dialing in from Singapore. Charu, as always, good afternoon.
Good afternoon, Brian. Happy Tuesday.
Happy Tuesday to you too. Now, I'm going to come back to you, Charu, after we take a look at all the numbers across the region, but we start first with crypto markets. Bitcoin is at 29,082, down 2.4%. Ethereum is at 1,847, down 1.3%. Now, looking across the regional stock markets, we start close to where you're at. The Straits Times Index is up 0.27%. Bursa Malaysia is up 0.69%. Shanghai is up 1.91%. The ASX All Ordinaries is up 0.43%. The Nikkei is down 0.29%. The Hang Seng has rallied a whopping 3.4%. And rounding out the numbers, we've got the Kospi, which is down 0.01%. Charu, your views on market performance in the first half of the day?
Clearly, with Hong Kong and China indices being the leader there in the first half of the day, the sentiment is being driven by the announcements that we saw from the Chinese authorities at that Politburo meeting last night. And, there's been some more promises of stimulus measures and some more expectations that have now built in that, the authorities will continue to support some of the key sectors of the economy. So that's obviously filtering through to those two major indices, but also into the other Asian indices. And it's an interesting setup, this week. It's such a critical week. We have G3 central banks meeting. We have a huge test on earnings as well. We have about 180 companies from the S&P 500 reporting. So, going into all of that, and now we get these China announcements. I think it's really a game changer because so much risk had been priced into Chinese assets. So this really gives a ray of hope to those investors.
Okay, so then, Charu, perhaps you could break down some of the key points in this latest Chinese stimulus.
Yeah, absolutely. So I think one of the key focus has certainly been on the property sector, which has been dragging down the economy in a big way. So I think notably they have omitted the statement that they have made previously saying that housing is for living in, not for speculation. So that is giving some expectation that we could see some measures to support the real estate sector. Besides that, there's been some support for consumption as well. But I would say there's little detail, and it seems that Chinese authorities are still trying to avoid a big bang stimulus. I think they're pretty conscious of the fact that long-term economic potential or long-term stability as well as deleveraging are some of the priorities that they want to keep, they want to stick with. And given that, they cannot afford a massive fiscal stimulus. And that's exactly the point that investors should also understand, because it's probably going to be targeted sectors that will continue to get the benefit. So investors would want to be positioned into those sectors as well, where the government hand is there. Something like energy transition, something like advanced manufacturing, and also obviously AI and technology sectors.
Now, I want to shift the focus then to US earnings. As you alluded to earlier, lots of companies reporting earnings, 140 plus companies. But today, key in focus, obviously, Alphabet and Microsoft. What is the consensus there in terms of the earnings expectations?
Yeah, exactly. I think that's going to be the big focus today and the other big tech names, including Meta, later on in the week. And again, the setup here is very interesting because we've seen this significant rally in US equities so far this year. But it has been such a concentrated rally. It's been mostly driven by the top 7 or 8 names. And when we get to the reporting season for these 7 or 8 names, whether it is going to be enough for these companies to meet or even beat consensus expectations, will that be enough, or will they really need to deliver something over and above that to be able to match up to that sentiment that has already built in? And we've seen that with Tesla earnings and with Netflix earnings last week as well, where they were able to broadly, I think they were just all both of them were able to beat the consensus expectations. But over the next 2 days after the earnings, their stocks were down 10% or more. So I think that is something very important to keep in mind. Individually, if I talk about the two stocks, of course, AI theme will continue to be on test, and I guess the focus is shifting now a little bit, where in the first quarter, we were actually looking for companies to announce plans of their investments in AI. But in the second quarter earnings, I think we're going to go beyond that, and the market is going to expect to get some clarity on what is the payoffs that the companies will be expecting, given that they are making those huge investments in AI as well. And then this huge run higher in PE multiples of these big stocks, it simply means that earnings expectations are running way too high. If I just compare, Microsoft and Alphabet, Alphabet's forward PE is a lot more reasonable. It's about 17 x or so, whereas for Microsoft, it's double of that. And it's again, given that Microsoft has been the leader in the generative AI space with its ChatGPT announcement. But will this earnings continue to satisfy those high expectations or not? That really will be the big question.
Charu, on that note, thank you very much for your insights. Thanks for coming on your show.
Thank you, Brian. Always a pleasure to speak with you.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Market Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.